It's the Real Estate Podcast, brought to you by ANZ Home Loans for financial well-beings.
Hey, welcome back to another episode of the Real Estate Breakfast as we cover the latest property news every morning on iHeartRadio, Spotify and Apple. You should know that by now. Or, of course, wherever you get your podcast from. It is the weekend. We've rolled into a Saturday, December the 2nd. And if you've got a highlight for 2023 that you would like to share with us and we can share with everybody else, don't forget you can email us to myrealestatepodcast@gmail.com. That is myrealestatepodcast@gmail.com. Well, yes, it is the 2nd of December and it has been a really busy year. Somebody that has contributed enormously through 2023 is Anthony Landahl, the Managing Director from Equilibria Finance. And Anthony, a very warm good morning to you because you're on the Gold Coast, so a bit of a temperature shift.
Yeah, I'm up on the sunny Gold Coast. Been up here for the course of the week for some industry events. So yeah, the sun's out, the humidity's out, but it's nice to be up here.
Now, you were doing a panel, you've been networking, so yeah, I guess it's always interesting catching up with other industry leaders because you're a small business and, you know, just networking further beyond Sydney.
It's been an interesting industry event. We've had Ross McEwen from NAB was talking, coming from the bank's perspective and the growth in the housing market. We had the head of Ray White here, looking at it, what's been happening from the real estate perspective and obviously us as mortgage brokers. So we've got some interesting perspectives on the housing market, which we're going to touch on, what's happened in 23 and what's on the radar for 24.
Can you believe that we're actually now into December, closing out the year?
Yeah, it's been a frantic year. I think everyone's reflected on that a little bit while we've been up here, just how, no, I don't think anyone would have thought 23 would have been as busy as it has been in terms of the housing market, particularly, I guess, in terms of our industry. So the year hasn't ended. It'll close out in a couple of weeks, I guess, but still a fair bit to be done in the next few weeks.
Well, Tuesday, let's not forget on Tuesday, not far away, the RBA, once again, you're going to be here.
Yeah, the final meeting for the year. So it'll be interesting to see what they say. There was some encouraging inflation data that came out in the last couple of days, which I think probably indicates that they might put the queue in the rack for the year and hold rates until early in the new year.
All right, so prediction is you think they will hold?
I think they'll hold in December, but I think in 2024, my view is there'll probably be another rate rise, maybe around February or March.
Okay, so we'll come back. We will talk on your Saturday morning, more real estate, more mortgage talk with Anthony Landahl in just a moment.
Let's fuel your passion for property together. Join us, along with our industry experts, to help inspire and inform your next real estate decision.
Well, if you are a first home buyer and currently looking at the rental market and saying, gee, I'm renting an apartment, it's getting way too expensive, perhaps I should buy, well, PropTrack data suggests that that is exactly what's taking place. It is more financially advantageous, they say, in several major cities. And there has been a surge in demand for apartments in the price range of 300 to 600k, particularly in inner Melbourne suburbs like Richmond. And if you are having a look at an apartment today, good luck with that. If you're celebrating your birthday calls for today, December the 2nd, many happy returns. Lucy Liu, the actor, she is turning 54. Nelly Furtado, the singer, is turning 44. Britney Spears, she's turning 41. And, oh yeah, Def Leppard's bass guitarist Rick Savage, he is turning 62 today.
It's the Main Centre forecast.
And around the country, let's have a look at your weekend weather for Saturday, and expecting some showers today in Sydney, developing with 25 degrees. Melbourne expect cloudy conditions and expect some rain with 18. Brisbane, a chance of some rain with 32. And in Perth, a sunny day, little bit of cloud, and 27 is your forecast high.
If you're confused about the property market, don't be. Unlock and educate yourself with the latest trending analysis and interviews.
Yes, we are back on your real estate weekend. Anthony Landahl is here, the Managing Director from Equilibria Finance. And the Australian property market, it really has experienced this whole volatile journey for 2023. And the question is, will 2024 be the year where we get into calmer waters? Well, Anthony, let's, recap first off on the whole credit in 2023. We've talked about credit on a number of occasions. So what did you see across 2023 that really stands out?
From a credit perspective, which is essentially looking at how much money people have borrowed, we certainly saw a drop-off from the highs of 21 and 22. We were down about 30-odd% in terms of credit flows for owner-occupiers. That is new home buyers applying to get a loan, was down around about 30%. Probably where we saw the most drastic turn was for investors. Their credit flows through the peak of 23 were close on down about 40% on previous years. So that's probably where we've seen the main impact was with investors. Interestingly as well, credit for new construction, for new dwellings was down as well. So across the board, we've seen a real slowdown in credit flows. We are starting to see that pick up a little bit. The main area of activity was around refinancing over the course of 2023. That's now slowing down a little bit as well.
Yes, and in terms of credit flow, credit flow kind of leans itself into the way your clients, your customers behave, both the occupiers and the investors. So what has that customer-client behaviour been telling you throughout the year?
It's very interesting. Probably a good place to start is with affordability. Housing affordability in Australia has never been so challenging, whether you're a first home buyer trying to get into the market or whether you're an investor trying to hold a property, the cost of getting into the market, the deposit requirements. So affordability's been very challenging, and credit flows, affordability, all then flow into buyer behaviour. So for owner-occupiers coming into the market, we've seen a real softening in demand through 2023. In terms of their behaviour, what we have seen is the frenzy's come out of the market a little bit for them though. So there is more time to negotiate a better price. There is more time to find the property. Listings are remaining on stock for longer. So owner-occupiers, whilst the market's still growing, owner-occupiers have been coming in the market a little bit more cautiously, but they've got a bit more bargaining power at the table. Probably the big area where we've seen some real caution and change is with investors. We're seeing listings for investment properties at record highs. There's some 36% of new listings at the moment are investors in some areas. What that's telling us, investors are leaving the market. The reason is the cost to hold the property, whether it's maintenance, whether it's agency fees, are all increasing with inflation, and also the interest rate rises have all made holding a property for an investor difficult. There's also been the various tax and legislative changes in Victoria, for example, that have made it a lot harder. So we're seeing a lot of investors leaving the market. We're seeing owner-occupiers cautiously coming into the market with more bargaining power at the table.
Yeah, some of those tax changes, as you rightly say, it's all been about just trying to hold on, and in many of these cases they've just decided, no, it's reached a point of no return, let's sell out and get out of the market. And that sort of leads me into the next question, and that is about the housing market. It has been actually quite resilient, hasn't it, during 2023?
Yeah, it's funny. It's sort of counterintuitive to the discussion we've just had. But the main reason is this mismatch between supply and demand. From a demand perspective, we're getting population growth as strong as it's ever been. We've had some 150,000 migrants per quarter net come into Australia over the course of 2023. There's been a couple of other shifts which has sort of kept demand reasonably strong relative to supply in terms of pricing. People living here are wanting a bit more space, so the size of our households are decreasing a little bit, which means more people are wanting a property. And with the tight rental market, that's also adding to some people thinking about buying. So whilst owner-occupiers have been cautious, demand is essentially being propped up by those three main factors. Then from a supply side, we've got this chronic shortage of property. We're not seeing people being forced to sell as many people predicted. New listings were a bit lower in 2023. They have rebounded at the end of the year. And we're just not getting the construction. Dwelling approvals continue to fall. The federal government talked about building 240,000 properties per year for 5 years. We've got 170,000 approved for 2024, 135 for 2025. So we're just a long way from this supply and demand coming back into balance.
Yeah, I was just reading the other day. Now, I forget where it was, but there is a suburb or a city somewhere, a small little town that has decided to be the developer. The council has decided to be the developer because nobody was building in their town. So, I mean, that just goes to show just some of the frustrations with the building going on around the country.
Yeah, and it's been a difficult time. It's sort of shifted from cost of materials, supply chain issues to actually now all levels of government have to take some responsibility. If we're going to be having these population growth like we are, people need somewhere to live. So there's a lot of different things that people are looking at, build to rent schemes, local governments getting involved, looking at loosening up greenfield projects and stuff, but they're all in the pipeline. So there really doesn't appear to be any short-term solution. Albeit, there's some people starting to talk about other things, as you've noted there.
And let's have a look at 2024, which is rapidly approaching. Will the market, the question is, keep growing? And what do you think about in terms of the growth for next year, for 2024? We've also got to throw up the rates because goodness knows what's going to happen as far as the rates are concerned as well.
Yeah, we're coming into 2024, and I think the main sort of influences are going to be in terms of the rate hiking. I think the main part of that cycle is over, but there might be a little bit more yet to come. Economic conditions in Australia are expected to worsen a little bit as we battle with inflation, as our employment market stays quite strong. Providers' credit policy remains quite cautious. Construction pipeline remains quite low. So I think what we're possibly looking at seeing is a bit of a softening in the market. The housing market has grown again since around February this year, back to essentially similar levels that it was hitting in at peak of April 2022. So the growth has continued, but I think we're going to see the rate of growth slowing for some of those reasons I've just talked about, where the impact of those interest rate rises start hitting households more. We might have another rate hike. Maybe the employment market will loosen up a little bit in terms of our unemployment rate. So I think we're probably just going to see a bit of a slowdown in growth over the next 6, 8, 10, 12 months.
Yeah, the rate of growth, particularly when you have a look at Sydney, that has been one of the absolute standouts for 2023, without a doubt. All right, well, that kind of wraps us up on our Saturday morning, Anthony. I will look forward to catching you back on Tuesday because, once again, we are going to bring that all-important decision from the RBA.
We sure are, and I don't think there's been as much focus on the RBA and interest rates for a very long time in Australia. So it's our last meeting for the year and looking forward to it.
Don't navigate the real estate market alone. Let us help guide you in the world of real estate every day. Make better informed decisions with the latest news and insights.
Hoping that house prices might take a step backwards in values. For that to actually happen, what order of events would you need to see before prices start to move in the decline column?
it would need to be the continued acceleration of listings, because listings in 2022 when declines were present and house listings in 2023 when the recovery was present, there hasn't been huge differences. They've been fairly similar. If the interest rates continue to increase and the listings trend that's recovered starts to recover more and more into 2024, then that would be one trend to say that, hey, more choice equals increased time to sell, increased vendor discounting.
We connect you to the best real estate information across Australia. The Real Estate Podcast.